there to make deals. Our business animal spirits back. Let's talk to our distinguished expert panelists. We have Barry Ritholtz, CEO of Fusion IQ, Harry Rady, CEO of Rady Asset Management, Mike Holland, chairman of Holland and Company. Hello, everybody. Barry Ritholtz,
yes,
we're going to drill down on the inflation threat in the second segment, but I want to ask you from a stock market standpoint. With all the talk about inflation in the air and a front-page Wall Street Journal today and so forth and so on, and a big stock rally, are stocks an inflation hedge in your judgment?
Well, it's not so much that they're an inflation hedge as the same underlying factors that tend to drive stocks and inflation are at play. We have the economy growing, not as much as we'd like, but clearly growing, especially compared to 2 years ago. That growth will drive profits in stocks. It'll also drive demand for commodities, and as we've seen in the emerging markets in Asia, it'll drive commodity prices. So the same economic growth is really impacting both elements. But I wouldn't really say it's a hedge against inflation.
All right, that's an important point. Harry Rady, do you agree with what Barry said, that it's growth that might be driving this, including the inflation threat, but that stocks by themselves, per se, are not really inflation hedges?
Yeah, I think that's true, but we're bottom-up investors, so it's really difficult to generalize. There are cheap stocks, there are expensive stocks, there are stocks that may act like a hedge, and there are stocks that won't. I just want to throw out a concept for you. We think it's time to ring the caution bell, if you will, and ring it loudly. There still could be some upside in the stock market, but we think that valuations may be getting a little bit ahead of themselves. But we think that what the market is really missing is the potential for unexpected shocks, a la what happened in Russia today. So we think that the way to protect yourself against that is via the VIX. We think that the options market is not adequately pricing in the potential for an unexpected shock, and that provides an opportunity for investors to protect themselves via the VIX.
Well, it was interesting to me, Mike Holland, today. Jean-Claude Trichet, the Euro central bank head, he was saber-rattling against inflation. European inflation is creeping up, especially in Britain when it's about 4%. China got 5% or thereabouts. India 6%, Brazil 6%. It's kind of like a virus out there. Now, these other central banks are tightening in Asia and Latin America. Trichet is threatening to. Mike Holland, what would happen if Ben Bernanke changed his stripes and sneezed or coughed or burped that he is looking to tightening against inflation? Well, if such a thing ever happened, what would it do to the stock market? In your judgment, Mike Holland.
If it happened today, Larry, the stock market would be very unhappy. All the economies you talked about are economies that have been growing rapidly recently, while our economy has been very much under capacity, both plant and labor. Jobs, jobs, jobs is the mantra. We are not anywhere near where these other economies are. If he talked about slowing down this economy from here, the stock market will react very, very badly.
Well, let's say he puts a lid on QE2, or certainly makes a statement, a bold statement from Helicopter Ben, that there will be no more QE2s, a.k.a. QE3 and QE4. Suppose he adopts Trichet's mantra that core inflation may not be the best measure, that overall inflation, which appears to be rising. What would that do, Mike Holland? Just a little bit of a Bernanke sneeze into a handkerchief. How would that play in stocks?
Yeah, that would cause the stocks to get a little bit of pneumonia when he had that little bit of a sneeze. And I have to tell you, Larry, I think that any of this talk with Mr. Fisher and the others coming into the Federal Reserve meetings as voting members, I can't believe that Ben Bernanke is going to do that. He's worked too hard over the last few years to get this economy out of the funk because of all the silliness that's gone on in Washington. He's been the lone gunman there trying to help keep the bad guys away, meaning this recession. I think he's done a great job. I know that's not a popular stance to take, but I think he has done a great job, and I don't think he should change one iota of where he is.
Well, it's nice to hear you pledge allegiance to easy money in Helicopter Ben. Very few people do, and I want to go to Barry Ritholtz on that point. It strikes me that Dick Fisher of the Dallas Fed and Charles Plosser of the Philadelphia Fed, they're all pretty good Americans, if you ask me, Barry. And I want to ask you, you're a little concerned that this rally is getting pricey right now. What might trigger a correction in your judgment?
Well, let me sort of backdoor that question a little bit. Keep in mind, Trichet doesn't have a dual or even a triple mandate. His only mandate is inflation, so he doesn't care about jobs. So I think Mike is correct in identifying Bernanke has more on his plate. There's a couple of things that make me a little nervous in the current market. We've caught a good chunk of this run-up from March '09. We're now running about 50% cash, and that was not so much a market call as just a lot of the names we were in had hit our upside targets or exceeded them, and so it was prudent to ring the bell, take some cash off the table. We were long Citigroup. We did well with it. We were really unhappy with what we heard when they announced their earnings, and so we got rid of that position. We were long some of the cloud stocks, and about 2 or 3 weeks ago, they went hyperbolic. We sold names like Rackspace because they just had detached from prior trend lines, and thank goodness we got out of those names. So what makes us nervous is this rally is a little long in the tooth. Not only that, it's the most intense rally we've had over 22 months, over 2 years in history. In fact, if you go back, look after the Great Depression, 1932, 1935, you had 2 rallies after a year, 120%, 80%. After 2 years, they had given all the gains back and were negative. Here we are, 24 months, nothing, or 23 months, nothing is even close to this. We're over 90%. The next closest rally, I believe, was 1974, about 65% over the same time period. So, again, back to gentle, easy Ben, helicopter Ben, a lot of what's going on has to do with the Fed's distortion of stocks with QE2 and a lot of cash. I know they're trying to keep the boogeyman of a double-dip recession at bay, but there will be repercussions, and when that goes away, it's not likely to go away smoothly and easily. Well, it's likely to be a dislocation.
Harry Rady, all right, you heard Barry talk about an intense rally. Harry, you're kind of an intense guy, and I want to ask you about the intensity of corporate earnings. It seems to me, at the end of the day, the rise in corporate earnings has really fueled this market, and it's turned out to be a stronger story, including now being bolstered by revenues, sales. So how long can it last, Harry? I know you're a bottom-up guy, but I want to get your top-down wisdom on this. Earnings and business animal spirits, an announcement of M&A deals and stock buybacks and dividends and all the rest of it. I mean, that's awfully good news for stocks. Will it last?
Yeah, I'm optimistic. I think it will last, but I think the trajectory will even out, if you will. You know, we're coming full circle, and the easy comps are going to be behind us. So now it's back to reality. Now companies are going to really have to work to hit the numbers. You know, all the cost cutting is behind them. All the easy comps are behind them. So, and frankly, competition is fierce. So we expect less correlation going forward. In other words, we're back to a stock picker's market where alpha is going to be king. And so I just go back to what I said before. VIX, VIX, VIX. It's time to buy the VIX to protect your gains.
Mike Holland, what about the State of the Union message tomorrow from President Obama? Is that going to be bullish or bearish in your judgment?
I think we continue to hear him move toward accommodation to the business community, that jobs are now a key issue for him, that he wants to get reelected in the next election. I think the move to take Mr. Immelt in and Mr. Daley into his administration, these are all signs that he's trying to do a rapprochement with the business community. He's really damaged that relationship. I think he moves. That's a positive for the market.
You know, Barry Ritholtz, it's funny, I wrote a column basically praising Jeff Immelt for having him in this board, and I believe Mr. Immelt is in favor of a corporate tax cut. A lot of my conservative friends are coming out screaming Immelt is what's called a crony capitalist, Barry. Now, I don't know about crony capitalism. I'm not sure what that means exactly. What are your expectations for crony capitalism in the State of the Union message?
Well, that's a loaded question. Let me just follow up what Mike said. I don't know what people are talking about with this administration starting to have a rapprochement with business. This administration has been in bed with the banking sector, courtesy of the now gone Larry Summers and the rest of the Rubin crew that's running the economic division of the White House. So I know we treat banks differently than we treat everybody else. So maybe the rapprochement is with the non-banking sector, which had been ignored while we basically opened up the vaults and gave everything to the banking industry.
That's what I was talking about, Barry. Absolutely.
I've seen Immelt speak at various conferences. I'm pretty impressed with him. What I think of as crony capitalism is sort of what went on with a number of shops where the board would put a CEO in place and the CEO would take care of the board and everybody sort of greased each other and the shareholders were the one who were left out in the cold. Remember, I'm on a couple of corporate boards. When you're on a board, you represent the shareholders, not your own interest, not management's interest. When you get these crony operators and the people who vote for them, and to me, it's the compensation consultants, it's the mutual funds who just don't do their job in terms of voting the shareholders' interests because of their incestuous relationship with Wall Street. There's still lots and lots of crony capitalism going on. I don't know if Jeff Immelt is the guy I would single out as a bad example of it, but stop and think about all the people who are just so overpaid. Think about Nardelli at Home Depot, $200 million.
Well, I don't want to go too far down that road. I was just trying to figure out State of the Union. It looks like Mr. Obama's pro-business. I say trust but verify. I was just interested on your take. Thank you very much, Barry Ritholtz, Mike Holland, and Harry Rady. Coming up on Kudlow, the market showed it. It is the fear of inflation heading our way. So the question is, are we being set up for some serious surprises by the Fed? Plus, we thought President Obama was turning pro-business.